Business Stories live from the Sky Newsroom. A surprise fall in inflation down to 2.5% has brought welcome relief to the market and the Chancellor. But hospitality bosses warn that tax rises in the budget will mean the worst is yet to come. We'll hear from a Michelin-starred restaurant owner. Plus, the world's richest man, Elon Musk, is being sued for allegedly buying Twitter stocks at artificially low prices. Yeah, very good morning on this Wednesday, Business Live with me, Darren McCaffrey. Well, we're going to start this morning with some welcome news for the Chancellor. That is the surprise fall in inflation. It came in at 2.5% for December. That's down from 2.6% the month before, providing much-needed relief to Rachel Reeves. Analysts say that an interest rate cut next month is now more likely, but there are new warnings of hard times to come this year, especially for the hospitality industry. Let's bring in our business and economics correspondent, Paul Kelso. Paul, very good morning to you. Welcome relief and somewhat of a surprise.
Yes, certainly these figures for inflation are better than the consensus of economists thought. I don't know if they were better than what the Treasury was expecting, but they will have been welcome. Let's have a little look at the numbers and what underlies them. This is the basic chart of the consumer price inflation. You see the red line there is the Bank of England's target of 2%. Briefly dipped below that in September, now above it. And where did we get to today? We got to 2.5% in December, down slightly on the November figure, 2.6%. And the figures, so that's encouraging. It's a small amount. It's still prices rising, of course, as nobody will need reminding. But let's look at underneath those numbers, at the underlying figures, and there's some more encouragement in here. So here's the CPI figure. We turned it into a bar chart here. That's the overall figure, 2.5%. Now, not such good news. Manufactured goods actually rose slightly. The dark blue is what we're looking at here as today's numbers for December. But look at services. 80% of the British economy is made up of services. The Bank of England particularly keen to see service inflation start to recede before they address rates any further, and they have done. There was November 5%, 4.4%, so quite a big chunk out of that number. Again, better than economists were expecting. And core inflation, which is the number you get if you strip out volatile elements, food prices, fuel prices, sort of things that go up and down on commodities markets, that also fell 0.3 percentage points. So positive news there as well. Now, all of that will be something the Bank of England takes into account when it meets in February to consider its next move on interest rates. Interest, of course, the main weapon they have to tackle inflation and get to that 2% target we looked at earlier. Well, let's have a look at what happened to rates. Of course, we can see the step up. We climbed up the mountain when inflation was high, flattened off above 5.25%. We've had two steps down here. 4.75% is where we are now. The bank, it's saying it is on a cutting path. It will be gradual, but it will be conditioned by some of those underlying inflation figures. Now, let's look here. This is before Chancellor's budget. This was the implied path at the bank based on market expectations. This is where they thought inflation would head to. So down below 4%, just over 3.5% by the end of 2026. Perhaps 3.5, 3 to 4 cuts in the next year. That was before the budget, remember, which introduced big tax increases on business, many saying it will impede their ability to grow. This next line, this is since the budget. This is the implied path. So fewer cuts and rates staying higher longer. So that is what the markets think. Now, there is an expectation that has grown today. The markets bet on what chance there will be a rate cut or not at the next Bank of England meeting before today's inflation figures. That was around 60%. Markets think it's more than 80% now. So that's getting to the territory where it is taken as a given that the bank will cut. The vote last time of the 9 members of the Monetary Policy Committee was 6-3. So there's clearly some appetite to cut already. Let's have just a quick look to finish off on how we compare internationally. 2.5% over there, the UK, much higher than France. We can see below Germany, level with the EU as a whole. The US is the one we really need to think about, 2.7%. We actually get America's inflation numbers later today. They're expected to rise to 2.9%. Now, we've learnt today economists can be wrong, but if they do, that's likely to increase the upward pressure on borrowing costs in the States. And we've been talking a lot, haven't we, about the price of borrowing for the UK government. Well, most of that increase in the last few weeks has been driven by what's happening in the US with Donald Trump's inauguration and policies that will follow, all thought to be inflationary, imminent. So there's positive news for the Chancellor today, but much, she's not looking at a blank screen, I hope. Cost of living, a little easier for the rest of us, but still a long way to go.
Indeed, but the expectation, Paul, isn't it, that here in the UK, inflation could well continue to increase, couldn't it? Given the fact that that slight dip was down to volatile things like airfares, i.e. looking forwards, inflation could well rise.
It could, and we might be in a sweet spot here. It may not feel like it, but if this data that we've been talking about does lead the bank to cut rates now, it might be a little window before inflation starts to increase again. The bank certainly thinks it will. It's forecasted that inflation will increase more. I've seen projections already today. It could be well above 3% by late spring, early summer. And the challenging thing for the Chancellor here, both economically and politically, but particularly politically, it's one of the reasons people think that inflation is going to rise, is the impact of her own budget, particularly those business national insurance increases for employers, adding costs to business. All those costs, they come in, or those tax changes, the budget measures will start to feed in April. The Chancellor's own measures are increasing inflation, which the Bank of England and the OBR have said they believe they will be. It becomes even more imperative that Rachel Reeves is able to demonstrate she can offset that with growth in the economy. Now, tomorrow, we'll be talking about exactly that, GDP figures, some economic data, more economic data, to follow a week in which we've had markets taking against the UK without anything other than vibes, particularly to prompt it. Now we have some data to go on. So we'll see. The Chancellor is going to be working very hard, I should say, in the next few weeks to get that message of growth out there. We've already seen her in China, somewhat controversial in the last week. She'll be at the World Economic Forum in Davos next week. That's a gathering of political and business leaders from around the world. She'll be banging the drum for Britain there. She's then expected in the last week of the month to make a speech setting out her plans for growth. And we can expect to hear more of the kind of things like the AI announcements the Prime Minister was making on Monday. AI, one of the 7 key areas in the government's industrial strategy. We can expect to hear more about those other areas, things like life sciences, defence and the like, and how the government plans to stimulate business to deliver growth. All of that, of course, is medium term at best and long term, trying to address the structural problems in the UK economy. But in the short term, politically, and for the rest of us, we need to see some growth much quicker than that.
Indeed. Paul, live for us there. Thank you very much indeed, Paul Kelsall, our business and economics correspondent. Let's bring in Sanjay Rajat, who is Chief UK Economist at Deutsche Bank. Sanjay, very good morning to you. It is good news, isn't it? That is, I think, without doubt, core inflation, it is also down.
Good morning to you, Darren. Welcome news for the Bank of England, welcome news for the Treasury. You can bet Rachel Reeves is breathing a sigh of relief on this data point. And as Paul showed, it's not just headline CPI coming down. Economists can get it wrong. And today was a good example of where economists got it wrong. We were expecting slightly higher inflation to end 2024. Headline CPI coming in at 2.5%. Yes, that was good news. But what's even better news is that we see core CPI at 3.2% to end the year. And most importantly for the Bank of England, most importantly for an MPC that's very hyper-focused on services inflation, we saw that bucket in the CPI index coming down to 4.4%, roughly around 25 basis points below the MPC's forecast that they put out in November. So great news, broad-based declines in inflation, which is fantastic to start the year off on, especially given the volatility that we've seen in the gilt market. But of course, as you alluded to right at the start of the program, there are still upside pressures building in the economy. We're seeing it in different buckets filtering through. And so the inflation story, I don't think is changing significantly on the back of this print. There are still challenges here, and there's still a long way to go to get back sustainably to that 2% target that the Bank of England has.
And that's the big question, is it, Sanjay, where, I suppose, where do you get back on that path? Because the expectation is government spending is going to increase a lot this year. That's going to increase inflation. We could end up in a trade war with the United States. Where is that path?
Yeah, lots of moving parts. Fiscal policy, obviously stimulatory, so that's going to add to inflation. But of course, there are other things working against us, lots of headwinds pushing up inflation as well, that the Bank of England is going to be very cognizant about. Think about energy prices. To start 2025, we've had a pickup in dual fuel bills that was announced by Ofgem late last year. If you look at natural gas prices and the markets at the moment, we're anticipating another pretty chunky increase in spring. Come April of this year, pump prices still rising. That's pushing up inflation expectations, food prices picking up. And one thing that you and Paul were mentioning, which I think is very, very important, at least in the first 2 quarters of 2025, is how those tax hikes that Rachel Reeves pushed through in the autumn budget, how that actually impacts retail prices. Now, we know on the services side, low margin sectors, hospitality, leisure, these industries are going to be hardest hit. They will have to push through price increases. Retail stores will also have to push through price increases, albeit to maybe a slightly smaller scale. But no matter what survey you're looking at, PMIs, the bank's own DMP survey, BCC survey, today's Deloitte CFO survey, all of these indicators point to some increase in prices. But one thing I will stress, Darren, is that this is a one-off level shift. That is our core expectation. So yes, we will see higher inflation. We think there's a risk that CPI can get to close to 4% later this year, but we're expecting that to come down to roughly around 2% around springtime, summertime next year. This is a one-off price level adjustment, but we're expecting prices to come back sustainably to target in about a year's time.
So maybe some short-term pain for some long-term gain. We shall see. Sanjay from Deutsche Bank, thank you very much indeed for joining us. Well, Sanjay was talking about there, hospitality being hard hit, because despite that positive news this morning, there is a warning today from UK hospitality that they're entering a troubled period for the economy because of those tax rises we saw in the budget. But let's speak to Jason Atherton. He's a Michelin-starred chef with 16 restaurants around the world and someone who is concerned about how things may well play out this year. Jason, just talk us through, this is a difficult month. It always is for hospitality. But how difficult is this year in particular?
Well, this dragged all the way back to, the global pandemic, which the industry came out of. We came out quite positive. And then from there, all we've done is face headwinds pretty much. And then we get to this point now where we've got a new government, which we needed. And then after the promise of not much tax hikes, they've done the complete opposite, which has completely devastated our industry. I mean, to put employee national insurance up is going to be very difficult. I appreciate the gentleman before me saying that prices will have to go up. But, I live and breathe the industry. I have 8 businesses in London alone. And, the margins are just not there. We can't, customers will not accept a price increase at this moment in time. If you increase your prices, then you price yourself out of the market. That's just fact. So that's not going to happen. So we have to try and soak those margins up. When you look at an investor, we've just invested 5 brand new restaurants last year in central London. And I do it because I believe in London. I love London as a city. It's my home. I don't want to spend time away from London too much. But if you look at the States at the moment, their EBITDAs they're offering in an investor business is around the 12 to 15% mark. Here in the UK at the moment, you're lucky if you're getting 3 to 5.
And Jason, what does that mean in practical terms to someone like you? Does this mean, frankly, hiring fewer people? Does it mean getting rid of some people? Does it mean potentially having to close some of those restaurants?
Yeah, 100%. People are going to have to find some really hard choices in their businesses because, you cannot afford to have a huge workforce when the prices are going up. You can't afford to. Look, everybody wants to pay everybody as much money as possible. That's not the argument here. The argument here is the margins, right? Okay, where are those margins going to come from? You can only charge a certain amount of money for a meal out for 2, and people can only afford to pay a certain amount. So part of that is going to be to rent. Rents are going up. Even though the trend is that margins are getting squeezed, people are asking for more and more rent when that's just not feasible. So landlords are going to have to be really realistic about the future over the next 5 years till the industry gets back on its feet. The amount of staff you can employ is just not going to be the same. So then what happens is service standards get squeezed and then customer complaints come in. So you've got to manage that. And then on top of all that is the margins are so low here in the UK at the moment with no help from the government. I think, there should be when we entered out of Brexit, and when we went deep into that, and we took out the VAT on foreign people being able to come in to shop, was a massive mistake. That was a huge feeder to our industry in London. People don't understand the knock-on effect that had of people coming in every night between 5 and 7 o'clock. My restaurants would be full of people coming into town, doing shopping, claiming back their VAT, and then going on their travels around Europe. And London was very, very good at that. And now we've totally ruined that opportunity at that part of the market. And I just find it really tragic that we, as an industry, we don't have somebody in government who fights for our needs.
Okay, just two questions, Jason, if I can. I mean, first of all, it is interesting. The Irish government yesterday announced they're going to cut VAT for food-based hospitality to 9%. So clearly in different places, people are doing different things. But at the same time, the tax base is not going to change. Could this prompt restaurants having to change, to innovate, to use technology more, to waste less? People have to react to the situation they find themselves in.
Absolutely. The reason why I opened 5 restaurants like this is to react to the marketplace, because people want to spend less on eating out, so I had to react to that. So, of course, that is absolutely. But that's, at the end of the day, the margins are the margins, right? They are what they are, right? You've got to fight for them, and you fight for that last bit of margin to make it, is my investment worth, investing £3 or £4 million into a restaurant? Am I going to get my money back in 3 to 5 years before it needs a refurb? And if the answer is no, then why would we attract other people to come into this market and invest?
And just very far,
you're always going to have the small niche little restaurants around what come out of that quite well. But I'm talking about as an economy what is the third largest contributor to our GDP. Why is it being crucified so much? Untaxed from our government, it really needs.
Well, just finally on that, Jason, and just briefly, if you can, because we've run out of time, is you talked about how you wanted to see a change of government. Have you been let down, disappointed by Labour?
Yes, because I don't think they've done anything for our industry. They've not taken our industry seriously like the last government, and I really believe it's time, if this government is serious about making our economy a turbocharged economy, as promised when we voted for them, then they really need to take our industry seriously. And that starts at grassroots, and that is the government and Rachel Reeves, right? If you want hospitality in this country to be the best in the world, what it used to be, 15 years ago, then you need to start taking it seriously. And that is helping us in the short term to benefit in the long term. And I think it's fantastic what they've done in Ireland. I think we should do this.
Okay. Jason, really appreciate your time this morning.
Thank you so much.
I hope this year goes well for you and your staff in those restaurants. Thank you very much. That's Jason Atherton there, who's got 8 restaurants across London. Let's bring you up to date with some of the rest of the business news now. And the world's richest man, Elon Musk, is being sued for failing to disclose his purchase of more than 5% of Twitter stock in a timely fashion. US finance regulator, the Securities and Exchange Commission, said the delay allowed him to continue buying Twitter stock at artificially low prices, underpaying by at least $150 million. A lawyer, though, for Mr. Musk said that he'd done nothing wrong and that everyone sees this sham for what it is. Thousands of employees at the advertising agency WPP have signed a petition protesting against a new rule forcing them to come into the office 4 days a week. Employees have told Sky News that the move does not give the indication that WPP leadership cares about its people. Though a spokesperson for the company has also told Sky that we believe this is the right policy for the long-term interests of the company as a whole, knowing that it won't be popular with everyone. OK, you're watching Business Live here on Sky News. Coming up in just a couple of minutes, we'll be looking at the markets, the FTSE reacting well today to those inflation figures. All the details after this break.
What's it like doing this kind of stuff when he's not here?
Yeah, I miss him. He just inspired me to be a better person. He's shown us what living looks like in the toughest and most difficult of circumstances.
I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over. People here believe the water will be this deep for weeks. I've reported from around the world and around the UK. It isn't what politicians see from election battle buses, but what ordinary people see from the buses that shape the timetable of their lives.
I feel like there's no trust between the people and the politicians.
Labour's going to get in definitely, and they're no better than the Conservatives.
It is almost impossible to predict where these fires will go next. Ida has certainly left its mark on New Orleans.
It just feels heartbreaking.
Cartels in Mexico are flooding America with the drug. We are standing on the supply line right into the heart of America's opioid crisis. This gives you an idea of the strength of those winds, strong enough to bend and twist metal. Sky News, the full story first. Christchurch has been changed forever by what happened here.
There was a river of blood coming out of the mosque. That's a scene that you don't forget.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who made accusations, Sir Philip?
Can you go away?
Very good morning to you all.
Morning.
Do you regret the tweet, Gary?
There's no sign, publicly at least, of either side being willing to give ground. Brianna's dad told Sky News what he thinks of them.
If I'm honest, I hate them. They're just evil. They'll always be monsters.
Free wherever you get your news. How do you reassure the public that all of these mistakes wouldn't be made again?
God forbid we should have to do this again.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Fly Emirates, fly better. Fly Emirates, fly better.
Very welcome back. Well, let's have a look at the markets in a bit more detail today and what they're making, of course, of those inflation figures. And UK stocks have surged as investors, unsurprisingly, approve of that fall in inflation. We can also see, as I say, the FTSE up 0.76% there. It's also led to a rise in equities on the continent, sea of blue this morning, including, must be said, in Germany. On the foreign exchange markets, the pound has strengthened on that news, going only just up, must be said, very little up against the dollar, but at least it's going in the right direction, and also up against the euro, given the expectations that the Bank of England might well cut rates next month. Let's bring in Rachel Winter, partner at Killick & Co., who joins us. Very good morning to you, Rachel. Can we, just before we come on to the markets here in the UK, talk about Germany? Because we have seen another recession last year in Germany, Europe's biggest economy. Germany going through the worst economic time since the end of the war.
Yeah, really sad news. So as you say, we've had reports this morning that the German economy shrank 0.2% last year, and that's after it shrank in 2023 as well. So this is a real shame, considering it's supposed to be the powerhouse of Europe, and in fact it still is the largest economy in Europe. Some of the troubles are resulting from the fact that it was so dependent on Russian oil and gas, so that really caused it to suffer after Russia's invasion of Ukraine. But then more recently, it is very dependent on the auto sector, and people just haven't been buying electric vehicles. And looking forward, there are some concerns about what would happen if Trump imposes tariffs on German cars.
Yeah, fascinating. And of course, Germany's going to face an election next month, isn't it? It'll be interesting to see the political fallout there. We know the AfD are doing particularly well, but the expectation is the CDU will get in. We will be keeping across that. But let's return back to the UK and some more good news, in the sense that we've seen quite a lot of retailers do quite well over Christmas, and it appears that Currys is among them.
Yeah, very nice trading update this morning. The main headline is that they have reinstated their dividends, and UK investors are particularly keen on dividends. So that news has really pushed up the shares higher this morning. Currys did have a very difficult 2022 because the cost of living crisis really caused people to cut back on those high value electronic items. But they've had a really good turnaround over the last year. In fact, the shares are up 90% over the last 12 months. And it does appear they had a very, very strong Christmas trading period.
In saying that, we've been talking about the good news, but let's not lose the wider picture, if you like, which is that the UK economy is not fundamentally in a good place at the moment. And there's a further sign of that, isn't there, from Hayes, who's warning about the slowdown in recruitment. And this is something we've been seeing actually over the last couple of months and may really bite this year.
Yes, I do really like to look at the results from recruiters because they can be a really good bellwether for the wider economy. So as you say, when the economy is not doing so well, you do tend to see a slowdown in hiring. So we've had results this morning from Hayes. Hayes does operate globally, but actually Germany is its biggest market and about 20% of its revenue comes from the UK. And we are seeing a lot of weakness in those results from both Germany and the UK. And looking at the UK in particular, there was a 19% fall in the revenue coming from permanent hires. So that does suggest that employers here in the UK have been very nervous about making hires since the autumn budget in particular.
OK, Rachel, appreciate your analysis this morning. Thank you very much. That's Rachel Winter there from Killick & Co. Thank you. And don't forget, of course, we are expecting inflation figures from the United States, as Paul Kelso said a little earlier. Very key, particularly when it comes to borrowing. We're going to get that at 1:30 this afternoon. We'll bring you that here on Sky News, and we'll have analysis, of course, on Business Live with me at 4:30. So do join me then if you can. Up next, though, it is Prime Minister's Questions. There's the live shot from the House of Commons as we await Keir Starmer and Kevin Badenoch to take each other on. Is Tulip Sadiq going to be the main issue of the day? Trust in the Prime Minister. Stay tuned for that. That is coming up with Wilf and Sam at midday here on Sky News. And I will see you a little later on.
Very good afternoon to you. It's midday. You're watching Sky News. We're waiting, of course, for Prime Minister's questions to begin any moment now. Our Deputy Political Editor, Sam Coates, is here with me. Politics at Wilf and Sam's, you might call it.
I feel at home with you, Will.
Oh, well, there we go.
No doubt about that.
We're not at home. We are in the heart of Westminster at Millbank. Of course, not quite the heart. I think what we're looking at right now, Sam, is the heart of Westminster. And, of course, a full house, 4 p.m. queues. What are we expecting top of the agenda today? Most likely to be the economic data and with it, borrowing costs?
So nice to see Keir Starmer in the country for PMQs. Yeah, there's a lot for Kemi Badenoch and the other MPs to pick on. You've got that slightly better than expected inflation results that you were hearing about Paul Kelsey talk about a short time ago. We're less than 24 hours since Keir Starmer lost a member of his government. That was, of course, Tulip Sadiq. She was, until yesterday, not only the city minister, but the anti-corruption minister. She is, however, increasingly tied up in an anti-corruption probe in Bangladesh. That's all to do with her aunt, who was the ex-Bangladesh Prime Minister. She denies all the allegations. But to lose your anti-corruption minister because of a corruption probe is inconvenient, to say the least. So I would be surprised if some of that is reflected over the 40 or so minutes that we have for Prime Minister's questions. And then I think just the biggest thing on the agenda overall, leading into those inflation figures today, will be the sort of state of the economy, the fate of the public finances, the future of Rachel Reeves, which is a topic that the Tories have really majored on. Rachel Reeves in the Commons yesterday, I watched her performance as Chancellor. On that occasion, and I do think Commons occasions do matter when a minister's under a bit of pressure. I thought she did quite well. I thought she reassured her own side. Maybe she had advanced sight of those inflation figures, but she quelled some of the nerves because there have been nerves, not least in the markets.
One of the reasons I think the performance yesterday perhaps was quite strong was there's been pressure on her, but if you're going to continue... Well, here we go. Let's listen to the Prime Minister.
Thank you, Mr. Speaker. I know members across the House will want to extend our thanks to President Biden for his steadfast leadership and warmly congratulate President-elect Trump ahead of his inauguration. Mr. Speaker, in my conversation with President-elect Trump, we've underlined our shared commitment to the special relationship in the years to come. Mr. Speaker, this week we launched our AI Opportunities Action Plan, which will ensure we seize the opportunities of AI to benefit working people as part of our plan for change. That will boost productivity, transform public services, deliver £39 billion of investment and over 13,000 jobs. Mr. Speaker, this morning I had meetings with ministerial colleagues. In addition to my duties in this House, I shall have further such meetings later today.
Joshua Reynolds. Thank you, Mr. Speaker. With almost 4.5 million entries and exits in the last year, Maidenhead train station is a busy transport hub. But with crowded gate lines, flooded underpasses and a drop-off facility that isn't fit for purpose, the station needs major upgrades to give Maidenhead commuters what they deserve. So does the Prime Minister